the last time we spoke a couple of weeks back, it looked like we were in some sort of a Goldilocks sort of a situation. The BJP had just won state elections in the Hindi-speaking heartland, giving investors hope that there'll be political continuity in India. The numbers were great, GDP numbers were stronger than expected, and on the basis of that, the markets staged a tremendous sort of a rally. Do you think these bullish factors are now priced in? And what are some of the risk factors that you're looking for stepping into 2024?
Yeah. Hi. Morning, Suyash. Always a pleasure to be speaking with you. Look, I think last time around when we spoke, I think BJP just swept the largest Hindi heartland elections in this country, and which I think gave us confidence to the market that there might be a continued stability in the government, its policies, and everything. And I think the central elections in 2024 would repeat the pattern. And I think markets have completely factored in that thing in the sudden rise which we saw. To my mind, honestly, what is happening currently is I think markets are just about consolidating at these levels. There isn't, we saw a small downtick for last couple of days odd, but wasn't anything big to shock or jerk the market away. Mid and small caps saw some sharp correction though. And I think some pockets where the froth was quite visible, I think took some amount of beating. But all said, I think markets have again recovered back yesterday in the second half of the trade and today again in the morning. But nothing substantial as to indicate that the markets are again back with full gusto. My sense is markets will consolidate. This is the fag end of the year when most of the FIIs are going out on holidays. Some are kind of cutting down their positions and winding up their books and booking their profits out. So my sense is these are low volume days where sudden movements can actually change the prices. But my sense is these last 5-7 days in the year are about consolidating. Major risks actually I think remains as we spoke last time, which is oil prices and the global supply routes. And I think oil prices have remained where it is, but global supply routes have faced some disruptions owing to the disruptions by Houthi rebels in the Suez Canal area and kind of blocking those passages. So I think that remains to be seen as to how that pans out globally. It's some bit of a worry because of the strategic importance of that entire area in the global supply chain system.
Good morning, Mohit. Talking about the militant attack by the Houthi militants, I have some amount of data on shipping companies. Now, just for the audience, what happens when shipping companies charter rates go up on three factors. One is when there are attacks of this sort. The other one is when global oil prices change, and the third one is dollar. Dollar has steadied. Global oil prices have more or less steadied. They are not that volatile. So it is the militancy that is driving a change. Now we look at the 5 companies, shipping companies in the last one week. I will drive your attention to Shipping Corporation of India. The 1 week return has been just 3.5% as against almost 60% in the last 1 year. SR Shipping, the last 1 week, the returns have been just 4.2% as against 252.63% in the last 1 year. Same with GE Shipping. The other 2 companies, because of some internal problems, have had different in the top 5. Mohit, what do you make about the shipping sector? And 2, is it a good time to come into these stocks?
Hi, I think that's a very pertinent question, and I think something which is playing out in the minds of the market right now. To be very honest, it is one sector which is catching all the fancy and attraction of all the market traders as we speak. And I think the reasons which you highlighted are probably out there. You've correctly brought out the reasons which will lead to charter price increases increases, right? And I think a rebel attack. I think perhaps it's to do with the strategic importance of the Suez Canal itself. It covers almost 1/3 of world's global trade passes through that canal, 34% odd. And even when it comes to oil tankers, or even when it comes to let's say metal, I think around 8% of world's oil passes through that, and around 5% of world's metal passes through that. So the importance can't be undermined in any sense. And if ships have to ferry along the Cape of Good Hope, which is the longest route through South Africa and all, it will increase number of days, it will increase insurance costs, it will create delays in the global supplies, it will lead to perhaps some bit of inflation in some economies of the world, and so on and so forth. So the implications are far and wide. But I think one sector which imminently benefits from this, or maybe perhaps two sectors which imminently benefits from this, are the shipping companies and the insurance companies. To my mind, I think shipping is the biggest beneficiary because there is no extra fixed cost deployment, or there is no extra capital deployment per se. Some amount of variable cost, perhaps because of the longish routes and everything, gets taken into account. But otherwise, the charter price increases directly leads to the P&Ls of these shipping companies, and that's what market is excited about. To be very honest, the longer this delay or the longer this blockade continues, which to my mind isn't looking likely to be sorted in coming days or imminent days. So my sense is, yes, this could create a long time frame where we can see supernormal returns coming from all the shipping companies going forward. So to me, the sector is looking extremely attractive right now. From a short-term trade perspective, we are quite bullish on this.
Mohit, just carrying on that, there is one more report that has come out from CRISIL, which has projected a revenue drop in shipping companies of 5 to 7%. But this is as against in the next year, next fiscal. But this is as against a steeper fall that has already happened this year of 23.25%. Do you still hold on to what you had recommended as far as the shipping sector is concerned?
Look, Amit, I think my prognosis is more basis the short-term situation which is arising out. This is an special situation, kind of an event where a particular major global passage route has got impacted because of whatever terrorist attacks or so on and so forth, right? So I think in a short-term trade, from a short-term trade perspective, this is looking extremely attractive because, as I said, the charter price increase will directly yield into the P&Ls of these companies. So the
Right.
impact is fairly direct, without having a substantial impact on the cost side or on the balance sheet side of the companies. And hence, I think this is what market is factoring in. And the longer the situation stays out, my sense is, look, this is now once done. This is almost done for like a couple of months or a quarter at least, because it's very difficult for these kind of escalations to ease off pretty soon, right? So I think from that perspective also, it looks very attractive from a attractive trade from a quarter or a half yearly perspective.
Now, Mohit, as you rightly pointed out, this crisis has implications on both oil and global trade. If this crisis persists, if it extends, what could be the potential impact for us in India?
Look, I think India gets impacted only if there is a major escalation on the oil prices, right? And oil prices have been tapered off, has tapered off late. My sense is anything below 80, $85 on the Brent is fairly okay with India. Anything where oil crosses 90, I think starts hurting us. Around 100 at pinches is very bad. And I think till such time that it is above 90 level, we don't have to really worry about the oil economics playing out there. But yes, we always have to keep one eye on the oil. I think because which will and which continues to remain the biggest determinant of Indian markets.
All right. And before we let you go, Mohit, I wanted to ask you about the client mindset after this sharp run up that we have seen. What are they thinking? Are most of them looking at this market as an opportunity to build a perhaps a long term portfolio, something they'll hold for the next 5 to 10 years, let's say? Or are they getting increasingly jittery given the kind of wild movements we have seen this week?
Look, Suresh, I've always maintained, and we have been out there in the public with one statement of ours for last whatever 6 months or a year or so, that the cost of staying out of this market is extremely high, rather than cost of staying in and facing a correction if there is any likely. We haven't seen a substantial correction for almost like 6 9 months in this market now, and a very big sharp correction still looks highly unlikely unless all the risk factors which we have spoken about plays out to our detriment. So our continuous advice and recommendation to our clients has been that stay put with your asset allocations. Don't overdo. Markets are absolutely expensive,
Hmm.
but given the kind of momentum which we are seeing, given the kind of domestic flows which are there, given the kind of new money which will enter in the Indian markets come January, right? We have already heard news of some US pension funds entering indices where India will be a part of their global allocations. And then come June, we will have bond inclusions in the JP Morgan bond index, so on and so forth. So there's a lot of
Right.
money waiting on the table to end and enter Indian markets. And I think all this will have positive impact. The bond money which comes in will perhaps ease off our yields, even if the rates don't come out. And the yields easing will lead to a huge credit boost in the economy. And once
Hmm.
the elections are done and passed, we perhaps could see a revival in the credit cycle by the private companies also. Till now, we have only been witnessing a public expenditure kind of a scenario which government has been doing in this country. But once the private companies participate, I think it
Hmm.
will be a tremendous show. So my sense is people have to stay invested. Someone who's still not entered in, my recommendation is to enter as soon as possible. Any delay is
Hmm.
perhaps hurting the investors a lot. But yeah, take calculated calls. You can't jump in with all your capital right now, I think, and markets will give you those pockets of opportunity to enter in at right times and right spaces.